So obviously you're trying to solve this with your new company Hive, and it sounds like you guys are doing great, seeing a lot of growth. Who is like your target for who you're trying to help? Because I'm gonna guess it's not like some little SaaS company that's worth $5 million, right?
Totally. It's a big range. The smallest companies that typically would be sort of suitable to trade on Hive would be somewhere in the, let's say, 3 to 4, 500 million post-money
Okay.
valuation range
Okay.
as a venture-backed company. That would be the small end. And then on the large end, yeah, like as you say, it goes up to companies as large as like the SpaceXs of the world and the OpenAIs who are, that are valued at like 100 billion. So it's essentially anywhere in that range.
Which is interesting because those are all the companies that everybody's probably trying to FOMO into,
Yeah,
right?
for sure the retail investor world is hungering for access to this stuff. And I don't know if you saw the whole saga around that company Destiny that went public with a portfolio of some of these hot startup names and then proceeded to trade up to 10 times the value of the portfolio itself.
And we're back for another episode of the Startup Hustle. This is your host, Matt Watson. Very excited to be joined by the founder and CEO of Hive, Desai. They help companies privately. They're creating a secondary stock market, private stock market, which is something I think we desperately need in this day and age where a lot of the public stocks are all moving to private investments, right? Private equity is everywhere. So I think it's really cool what they're working on. Excited to learn more about that today. If you don't know, you can watch all of our episodes on YouTube. You can subscribe to our YouTube channel. I have a weekly newsletter at startuphustlenews.com, which goes to over 20,000 people. And don't forget, today's episode is brought to you by Fullscale. If you're looking to hire software developers, front end, back end, mobile, QA, no matter what your tech stack is, check us out at fullscale.io. Sim, welcome to the show, man.
Thanks a lot, man. Really appreciate it.
I'm hoping you can help me sell some stock options in a company that I'm stuck with. Can you help me with that today?
Depending on the company, we probably can.
So I'm curious, how did you get into this? Looking from your background, looks like you worked at a company called Setter for a long time. Looks like they were doing a lot of kind of related things. Tell us a little more about how did you get into this?
Yeah, so I'm a lawyer by education and training, but shortly after doing my law degree, decided to get out of that area and into finance. The opportunity to get in with like effectively a secondaries boutique, which is Setter Capital, presented itself, and I kind of jumped on it. That was about 2 weeks before Lehman went bankrupt, so that was quite an interesting way to start my career. Spent the next couple of years sort of searching around the market for distressed assets and fire sales, so that we could then broker those transactions to investors. But over the years, a market for these unicorn stocks started to develop, and it all started with Facebook around 2011.
Yeah,
And
I
suddenly,
got offered that one.
did you?
Yep, got
Yeah.
offered that one.
And it exploded. And at the time, SpaceX actually was at risk of actually becoming a public company because they had too many shareholders eventually because of all the trading. And then they changed the law to allow more shareholders. So anyway, over the years, that market started to expand, and we started getting into it in a serious way around the mid-teens, and just saw it grow and grow and grow and grow. By around 2020, I realized that there was so much growth and potential in this market, and it was definitely seemed like it was here to stay. It wasn't like a flash in the pan. But the big pain point and the big challenge with this market was the fact that it was so decentralized and opaque. So you couldn't go to one place to find like the current order book, the bid and ask, and all the buyers and all the sellers for a specific stock. You had to go and call around to 20, 30 different brokers to find, sometimes just to find a bid for what you had. So to me, there seemed to be a real opportunity to sort of centralize and automate the secondary market process.
So around that time, 2011 sounds about the right date. I remember one of the investment companies that I was doing business with came to me and said, "Hey, we have this pre-IPO stock in Facebook, their Series D or E or something like that, right?" And only really kind of high net worth individuals ever really get access to that, right? Or certain private equity groups and all this kind of stuff. So today, only private equity or high net worth individuals actually get access to those types of opportunities today, right? But the process for that is very broken, right? Like how do they even execute on that today? It's like just some random person that has like 1,000 shares and they're just trying to figure out who wants to buy them, but it's
Yeah,
very, spread out. Like nobody really knows exactly what the market price is, and how they track all that. Is all that like locked away and hidden in like weird SPVs? Like how do they execute that today?
totally. So first of all, I'll just say that things have changed a lot in the last couple of years, especially with the advent of our own platform. But still, most of the market does operate in the traditional way. And there is no easy answer for somebody who wants to sell stock today, other than stumbling across one of the marketplaces that specialize in it. If and before the marketplaces, really what you had to do was just kind of call around to people, ask questions, talk to company management. But company management doesn't have like a big interest in helping you sell your stock. They're not
Yeah.
brokers. They're not necessarily on top of the right way to find a buyer. So you had to just ask around and talk to people. If you were a venture fund, you had a better chance of finding a buyer. So if you were an investor and you had preferred stock, you had a better chance of finding a buyer because you had more connections, you were better networked, you could probably access the cap table of the company to ask them if they wanted to buy. But by and large, there was no centralized way to find that, and you'd have to just get through word of mouth, get referred to a broker, talk to that broker. You wouldn't even know if that broker, you'd have a phone call with them. They'd be like, oh, yeah, I can help you with that. But you wouldn't actually know for sure that they had access to a market for that stock. They may just be on the back of that phone call going and calling around to everybody else they know to see if they could find a bid. So it was a very painful and opaque and costly process, in the sense of costly not just in terms of fees, but in terms of the time you had to invest into finding a buyer.
So obviously you're trying to solve this with your new company Hive, and it sounds like you guys are doing great, seeing a lot of growth. Who is like your target for who you're trying to help? Because I'm gonna guess it's not like some little SaaS company that's worth $5 million, right? It's probably not the target for you. It's probably more like OpenAI or somebody like that. Like who is the target that you're really trying to help this?
Totally. It's a big range. The smallest companies that typically would be sort of suitable to trade on Hive would be somewhere in the, let's say, 3 to 4, 500 million post money
Okay.
valuation range
Okay.
as a venture backed company. That would be the small end. And then on the large end, yeah, like as you say, it goes up to companies as large as like the SpaceXs of the world and the OpenAIs who are that are valued at like 100 billion. So it's essentially anywhere in that range.
Which is interesting because those are all the companies that everybody's probably trying to FOMO into,
Yeah, I
right?
mean, for sure, the retail investor world is hungering for access to this stuff. And I don't know if you saw the whole saga around that company Destiny that went public with a portfolio of some of these hot startup names, and then proceeded to trade up to 10 times the value of the portfolio itself. So the portfolio was worth X based on where it's trading in the private stock marketplaces, and then it traded in the public market up to 10 times that value. Actually, I think 20 times at one point. The portfolio was worth 50 million and traded up to a billion in market cap. So that just shows you sort of how much excess demand there is from the street for this stuff.
Was Wall Street Bets driving that one up? Like Roaring Kitty was
Yeah.
leading leading the chase. Like what was going on there? Jeez.
Yeah, just really people just wanting to get into these kind of like prestige assets.
Yeah.
Actually, Roaring Kitty must not have been involved because the stock proceeded to tank back down quite a bit later.
Do you see a day and age that this will come down to more mid market or smaller companies as well?
Potentially, but not in the same way as the sort of the traded marketplace that we have on Hive. On Hive, you've got companies that sometimes will have as many as 30 or 40 transfers in a quarter, and so that's not going to be possible. So that level of sort of liquidity and tradability is not going to exist with some of these
Yeah.
smaller companies because they don't have that many shareholders So you
There's
really
no
need a
order
large
book.
number of shareholders in order to have sort of a tradable thing. You can still do secondaries. You can still sell secondary stock in smaller companies. It's just it'll be a much more painful process because a lot of information sharing involved, and it's a different type of process.
Well, it's probably more like the old days where people would do a road show, right? You're like,
Yeah.
I'm trying to sell 5 million, 10 million, 50 million, whatever it is. Nobody knows who this thing is, but I'm still going out to market and trying to find investors that will buy this secondary stock, which is kind of like a normal capital raise.
Yeah, and the reality is that a lot of these smaller companies, generally speaking, if they're doing well, they're not really looking for secondary liquidity, or the shareholders are not really looking for secondary liquidity at 100 million valuation or below that. If they are, if there's a lot of sellers of a really early stage company like that, it's probably a pretty bad sign. So I'd say that generally speaking, the need for liquidity or secondary liquidity starts to arise around that sort of mid 100 millions valuation range. And that's when you see both a need and the ability to sort of have a kind of a tradable market.
Well, so you guys have been doing this now for about 1 to 2 years, right? Like you guys are pretty new at this.
We launched in May of 2022, the platform. So we were
Okay.
building it before that, but that's when we launched the platform. So 2 years.
And so you and so you guys have seen a lot of success, a lot of growth over the last couple of years. Are there competitors out there that are also doing this, or at this point are you guys one of the really kind of first to market?
So we obviously have many competitors, but there's probably three or four firms that are the largest in the space. The difference between Hive and the others is that we're the most, call it, product forward amongst all of the competitors. So we have actually a fully integrated trading system that you can come on and use. And once you enter Hive's website or our platform, you don't have to leave, right? Like, in other words, you could actually fully self-serve to complete a secondary transaction, whereas that's not really possible with any of our other competitors. So I'd say that that would be one of the biggest differentiators of Hive compared to some of the other major players.
So can anybody log in and use your site, or is it only limited to certain accredited investors or different kinds of people?
Yeah. So at a minimum, you have to be an accredited investor to get on Hive, and there's a significant sort of onboarding process before you can get into the platform. You have to do things like identity verification, KYC,
Yeah.
AML checks, stuff like that. So at minimum, you have to be a accredited investor. But Hive, so we're not positioned to really go after, or we're not really positioned for small retail investors. So, the Wall Street Bets crowd are not going to really be able to access the secondary market through Hive, even if they're accredited. So we're looking for investors who use Hive would be writing checks, let's say at the very minimum 25,000 for a single investment. But the average investment on Hive, or the average transaction on Hive, is closer to the hundreds of thousands range.
Okay.
If small investors, like retail investors, are looking for a way to access the market, there are other providers that are much more retail oriented. Those providers in turn may come to Hive or other more institutional marketplaces to transact themselves.
Okay. And so how many companies are listed on Hive right now?
About 2,000.
Wow. Okay.
Yeah.
Holy moly. How much work was it to go get 2,000 companies listed?
Well, the way that the securities trading business works is that companies don't have to actively list, because
Right.
these are unregistered securities. So what happens is you can create a place to make trading available for a stock. So you can have a page. What we have on our platform, we've got a page for for 2,000 different companies, and that page is basically a meeting place for buyers and sellers of that stock. Ultimately, though, the company still, even after a buyer and a seller match on our platform, they still have to go and submit that trade to the company for approval, and that's a process that we take care of on their behalf. But the company still has to approve of those trades most of the time, especially if they're common share transfers.
So it's not like those trades don't happen in some other like separate entity that's kind of removed, so the trades can just happen and the company doesn't know about it. Like the company, like these are going all the way to the root cap table.
The vast majority of trades on Hive are direct share transfers. There
Okay.
are trades on Hive where it's a what's called an indirect transfer, which is, as you mentioned, somebody might have a vehicle holding a
Right.
certain stock, right, like SpaceX stock, and they want to sell, or one of the shareholders in their vehicle wants to sell a portion of that stake, right? So the let's say the vehicle, the SPV, holds $20 million worth of stock, but they only want to sell. There's an investor in the SPV that wants to sell like $500,000 worth of stock. So they can list their stake in that fund that holds SpaceX. So yeah, you can buy effectively fund the funds, like stakes in funds that hold these
Yeah.
underlying securities as well. You can do those indirect trades.
So you mentioned there's three or four different companies that are doing this. Sounds like some are more retail focused for like, somebody wants to invest $1,000 or whatever. But one of the companies that's obviously the most famous in this kind of space is Carta. And like I've used Carta before to manage our cap table and whatever. And they were trying to potentially build a secondary sort of market like this. And actually, Henry Ward came out at the time of this recording this week and it mentioned about potentially how we didn't think it was ever going to work. And for whatever different reason. I'm kind of curious, like, why do you think they don't think it's going to work, and they potentially hold everybody's cap tables for a lot of people, but
Yeah.
yet you guys are being successful with it?
Well, look, it's a really complex challenge to solve, right? I mean, there were a lot of different pieces that had to fall into place to make a marketplace like Hive work. Now, we have by no means proven that a universal secondaries marketplace will ultimately be the sort of the long-term kind of stable state of this market. We haven't proven that yet, but we have grown at a really dramatic rate. I think in terms of Carta, essentially a couple different challenges there. Number one, in order to pursue this business, you must have deep, deep expertise in secondaries brokerage. Carta did not ever actually assemble a team that had that degree of capability. You would need veterans with long track records executing these trades in order to have a real chance at making a run for that market. Carta did not do that. That's number one. Number two, Carta never had an actual marketplace product. They didn't build a marketplace product. They didn't quite get there. Carta was never actually a significant player in secondaries trading at all. And so then what ultimately happened was in January, essentially there was a scandal around Carta because they essentially used some cap table information that they had on a confidential basis from their customer in order to solicit that investor. Effectively, that investor's information was not public, and the only way Carta could have had it was by virtue of having access to that company's cap table. And so that was the sort of the scandal that kind of forced Carta out. It wasn't the act of doing secondaries or soliciting or anything like that. It was just simply the fact that there was too much potential for that kind of conflict between their two businesses for them to remain in the marketplace business.
So you talked about the challenge of doing this and needing all the experience. Is that just because of all the compliance laws? Like what part of this becomes so challenging?
So I mean, compliance is part of it, right? Like certainly you have the rules around the regulatory rules around this stuff are really complicated, and there are certain sort of practices that have evolved in the market over time, right? That where the experts know what practices effectively keep them on side of those rules, because you can't just read the rules, the regulatory rules, like some kind of playbook or some kind of guide to what you can and cannot do in the secondary market. This is just not possible to do it that way. You kind of have to know sort of what are the best practices and what are the practices that essentially have been over time through just norms, building norms, have been allowed to happen under the existing regulatory regimes. And I think that's one of the important things. But beyond that, I think the most important thing is just the fact that experienced expert secondaries brokerage businesses just know how to execute trades. They know how to get in front of people. They know how to go to market. They know what to say to buyers and sellers in order determine whether there's a high probability of success on a transaction, to identify attractive assets. I mean, it's just a know-how, like any other business, any other profession. It's something that you need to kind of really develop an expertise in over time.
I want to take a second to remind everybody today's episode is brought to you by Fullscale. I have over 300 employees in the Philippines that help dozens of other companies build software development teams. No matter what your tech stack is, you can check us out at fullscale.io. Sim, has it been hard to build the technology for this? There's a lot of technology behind the scenes.
Yeah. So look, our business is the product is very tangible. It's a marketplace. It's not deep tech. It's complicated. It's complex. But it's not sort of like building AI or something like that.
Sure.
So we definitely have a significant software product team. I think our product team is now up to 20, 25
Wow.
professionals. Yeah, including about 15 engineers and 5 or 10 product designers, product managers, and the like.
Moly.
Yeah, it's a very significant effort. That's out of a total headcount of about 75 now that we have. And
Wow.
so it's a significant effort to build product. It's a real intellectual challenge in the sense of from the perspective of what do we build in order to address the needs of the market. So that and I'm grateful to have 3 co-founders who have been absolutely essential in this journey. One of my co-founders, Sarah, has handled the whole operations and regulatory aspect. Prab has handled the capital markets aspect of this and leading the sort of the go-to-market function. And then Stuart Eccles is our CTO and head of product. And he's been just absolutely priceless in helping us navigate how do we turn this vision of a marketplace into this product that's gonna work for all the stakeholders.
Wow, that's incredible. Yeah, like that's a huge development team for this. I I'm actually excited to actually potentially go sign up for your guys' product and see what it all looks like. So if you see
Yeah.
my name come through, you'll have to approve me as a accredited investor. So I mean, you guys are trying to solve a complex problem. Do you and it seems like so much investment these days is all in the private markets. I don't think there's as many publicly traded companies as there was before. I don't think as many companies want to IPO. They're like, this sounds like a giant pain and a mess. I mean, do you foresee a future where, using a private marketplace like yours is a better alternative, and companies like, I don't want to be listed on the New York Stock Exchange or the Texas Stock Exchange for that matter, right? Do you see a future of that?
Look, I think that ultimately there will always be a role for public markets. The reality is that in the private market, there's a lot of reasons not to go public, right? There's a lot of reasons to wait to go public. Uh, One of those is that it's really costly to go public, and the reporting requirements are really onerous. The other issue that has kind of arisen recently is the fact that private companies mostly don't are not profitable. They might generate very material revenues, but I shouldn't say private companies. What I mean is the venture backed companies, the startups that we handle in our marketplace, oftentimes are not profitable, even once they're valued in the billions.
Yeah.
And so there's been a lot less kind of public market appetite for these stocks. But ultimately, there are going to be some limits on the utility of the private market for companies, and I think companies seeking sort of the maximum of liquidity will still continue to find that in the public market, and those companies who really want to have that degree of liquidity will find it in the public market. But certainly, increasingly, there are companies who trade on Hive, and like I said, are trading. There's 30, 40 trades going, and maybe 10, 15 trades a month happening on Hive, and they're finding a good measure of liquidity already in the private market. So yeah, I don't think private public market's going away, but I think it's going to be reserved for a very limited number of companies that are highly profitable, super large, and so on.
And so your guys' model, you just take a small percentage of whatever the transaction fee is.
That's right.
And so how do you guys handle like all the information disclosure and all that kind of stuff? Like if I log in there and I'm like, hey, I can buy stock in SpaceX, does it tell me anything about SpaceX, or like there's really not that kind of disclosure like there is in the public market?
Yeah, so we do display some information that we obtain from paid and public sources that summarize some very high level stuff about the company that's generally known. Things like the valuation, how many rounds of capital they've raised, who are the major investors, and the like. The thing about private companies is that they don't have, and this is one of the reasons why the private market will never displace the public market, is that private companies don't have financial reporting obligations. So they don't have to report information, and that's one of the reasons why private investing is only accessible to accredited investors and institutional investors, those who have both the sophistication to invest in these things, but also the risk tolerance to invest in something like a startup that could go bankrupt, and investing without information or without necessarily having information. So yeah, there's not a lot in the way of disclosure. Some of the buyers and sellers on our market can access information through their own channels, either because they've got a relationship with the company, or maybe they looked at the investment round or whatever, or they've done their own digging. But yeah, you don't automatically get access to information in this market.
So for some of these companies, I mean, if you're doing transactions on their cap table, right, they have to be supporting you to actually accomplish this, right? Like they have to be part of this transaction, unless they're happening in a separate investment vehicle that they don't really control what happens in that vehicle.
That's right. So any direct share transfer requires the involvement of the company. So now we've got so there's a lot of ad hoc transfers that we have on Hive, and we submit them to the companies. But increasingly now, we actually have companies that are engaging us on the front end to actually run their liquidity program. So effectively, what they'll do is they'll say, "Look, we want your platform to be the place where buyers and sellers of our stock can trade. We're going to tell you what the rules are. We're going to tell you who's approved to buy." What the seller eligibility requirements are. So some companies will say, like, anyone who's vested at least 3/4 of their options is allowed to sell a certain percentage of that, and so on. And then they'll also determine other rules, like they might set trading windows, like you can only trade for a month a quarter, or we'll only accept submissions at the end of the quarter, or things like that. Once they give us those rules, we will then hardwire those into our marketplace so that any trading of the company's stock follows those rules. And then buyers and sellers can have the confidence to know that those transactions, so long as they meet those rules that have been set within Hive, will get approved and will go through. Increasingly, I think a lot of the activity on Hive is that sort of ad hoc stuff where people meet and then we go to the company, submit the trade, and they tell us whether it's approved. They do row for all that stuff. But increasingly now we've got companies who are setting up their program, their liquidity program on Hive intentionally up front and setting the rules, and then we just run it.
Well, and some companies may see this as a huge distraction and a pain in the neck for them, right? But then some will see this as a huge advantage, especially if their founders like, hey, I own billions of dollars of OpenAI. I would love to sell some of my stock. This gives me an option to get some liquidity, right? So for some of them, they probably see this as a huge advantage for the employees to sell their options, get some liquidity, the founders to get some options, get some liquidity.
Yeah, look, I think that all else equal, everybody likes liquidity. Nobody doesn't like liquidity, right? Like there's no company that's going to say, we don't want our stock to be liquid, because liquidity has so many benefits. Liquidity has the benefit of the fact that when your stock becomes more liquid, it becomes more attractive, it becomes lower risk. What ends up happening when a stock is deemed to be lower risk because it's more liquid is the price goes up, right? Because investors say, well, my required return for a stock that's more liquid is lower, and therefore I'm willing to pay more for that stock. So a company that allows a liquid market for their stock is gonna reap those rewards. Employees who get to sell some of their stock are going to be happy because they're going to see that there's some value in that stock, in those stock options. If it's locked up forever, employees are like, well, it's only worth something if I can sell it. And a lot of them just like, okay, I'm just going to walk away from these options because they're not fungible. Your point though about companies seeing like this becoming a big pain in the ass if it gets out of control. So that is actually one of the things that we're trying to address right now. That's sort of the key pain point with companies that we're trying to address, by fully standardizing and automating that process of completing the sale, so that if they're working with us, then there's very little that they have to do, because we set the program up. They give us the rules, we set up the program, and then the whole thing runs almost on its own from there. Once in a while, we have to have information sharing back and forth with them in order to complete these trades. But that's the idea, is we're trying to sort of make it really easy for these trades to happen so that they don't have to spend the time on it.
So do you think SEC or the public markets are going to potentially try and make this harder on you over time because they're trying to protect the status quo and they want people to be public?
So I don't think the SEC is necessarily, or FINRA, which is the main regulator for broker dealers like Hive, are trying to protect the status quo. I think they are just trying to protect investors. So they want to make sure that what happens, whatever's going on in the secondary market, whatever the practices are not resulting in the average investor getting taken advantage of, or losing their entire fortune, and so on and so forth. It's the average investor that they're trying to protect, and that's the rationale for the accreditation rules. As this market starts to proliferate, right, as it starts to expand, you probably will see FINRA and the SEC step in and sort of try to establish more rules to ensure protection of investors. I think that you could, and you've heard there has been some talk even in the U.S. Legislature about potentially creating requirements for private companies to disclose more information as the trading goes up. So that might happen. There's also been talk about reducing the levels you have to be at to be an accredited investor to make this stuff more accessible. It's pretty unclear. I mean, regulatory change is definitely a threat, but it's pretty unclear which way it's going to go at this point.
So a few years ago, if you were starting a company like this, all the hype probably would have been to use blockchain to do this. Did you guys use blockchain at all, or do you see that as part of the future of this at all?
I'm a bit of a Luddite, so I can't, I'm not going to be able to comment too intelligently on the use of blockchain. But I always hear people talking about how blockchain can solve this. Look, at the end of the day, it depends what you mean by that, right? Like, are you using blockchain to create a marketplace? Well, we've been very successful at establishing a marketplace the good old-fashioned way. There's one central place where people meet. So I'm not sure what the utility of blockchain is there. What I do see is the possibility of blockchain of having some values, possibly for effectively eventually documenting and executing actions, where you can document ownership on the blockchain instead of, for example, on Carta or Pulley or whatever. So you might see that kind of change where the recording of information about the transaction is done through the blockchain. But I don't see anything too imminent there. I think we've got a number of steps to go before we start seeing that change.
So it wasn't, you guys didn't jump on that bandwagon.
No,
Not yet.
not yet.
Yeah, like a few years ago, that would have been the thing. Everybody was raging about blockchain is like the future of everything. But you guys prove like we can do this. We don't need blockchain.
Yeah, exactly. Although I will say that a lot of blockchain tech companies do trade on our platform. Companies like Chainalysis, Ripple, and these are all companies that are really actually
Interesting
on Hive right now. Yeah, so there's no shortage of interest in blockchain technologies, no doubt.
Do you foresee ever being able to create some kind of funds on your platform? Like as an investor, I could go in and just buy, like I want to invest $1 million and spread it across all this stuff. Like, do you see creating a fund at some point?
So right now we have effectively these single asset funds where we're not actually acting as an advisor or investment manager on the funds, but what we do is if there are, for example, you've got like a mismatch between buyers and sellers in terms of size. So you've got a seller or a company that has 5, 10, 20, $50 million worth of stock they want to sell. And you've got a number of small buyers who are sort of willing to maximize price, but they're only writing $100,000 or $500,000 checks. So we can create a vehicle to collect all those investors into that one and then buy the stock. We've done that. In terms of diversified funds, yeah, I do see that as an eventuality for this market. And there are people working on that. And that could be something we tackle at some point.
Because that would be pretty cool. Like if I could go and invest $1 million, and then you can spread it across those 2,000 companies. That would be pretty cool as well,
Totally.
to diversify. So, well, I really appreciate having you on the show today. Again, this is Sim Desai, founder and CEO of Hive, which is HIIVE.com. If you're an accredited investor, go check out what they're doing. Get access to 2,000 companies on the private market. Very cool. I enjoy seeing your updates on LinkedIn and your guys' growth. Sounds like you guys are really growing fast, and a big congrats to you. Any final words of wisdom or tips for other entrepreneurs out there?
Look, I would just say as a marketplace, yeah, you're gonna if you're a marketplace entrepreneur, which is the thing I know now, or I'm learning a lot about, there's gonna be a lot of slings and arrows along the way, right? Like you're changing the way people behave, and the incumbents are not gonna like that, and the entrenched existing interests are not gonna like that, and if you believe in what you're doing and you see that there's really value creation for the world in creating a marketplace, then just keep pushing forward and stick to your guns.
Awesome. Well, thank you so much for doing this today.
Absolutely. Thank you for having me.
Thank you.